Good morning. Today's the 3rd of January 2024 and I'm going to go through some of my trade plan for today. I've got a few levels I'm watching. Before I start, let's just check what economic news we've got coming in today, because this could affect any trades we may be in. So we've had a few minor ones today, one at 8:30, Fed speaking, and we've got a couple majors today at 10 AM Eastern Time, ISM, manufacturing, PMI and job openings, both at 10. And then we've got another major one at 2 PM today, so be wary, FMOC minutes. And I don't trade FOMC at all, but it could be, if you're in a trade, I do sometimes get into trades from about 12 till 2, but I'll make sure I'm out of a trade by that point. Okay, so they're the news. So that's the news for today, just high importance, 10 AM and 2 PM. Let's get rid of that. Go back into that one. Okay, so probably the only levels I'm watching today is a bounce area, similar to what I was watching yesterday in this area of supply and demand. Let's change that to yellow. So I'm going to take this as a two-phase trade. So I want to get in as we get close to this demand zone, maybe that area there, so slightly above the green zone. And let me just create an alert. So 47.56, 47.57 area, so that's the area I'm watching, and I want to get in as we come down into this, as we touch the green zone. So I probably have a limit order sitting there waiting, and I'll add an alert on that line. So I've got an alert. The next area, you can probably guess based on the alert, is also the bottom of this demand zone as well. That's when we bounced off the 200 moving average last time, back on Wednesday the 20th December. So I'm going to use that area as my entry, and it's a $10 gap. So I'm going to keep the tight, my stop tight, and if we stop out, then I'll be looking for a re-entry back down here. So 74.44, 25 and 47.66. So 47.44, 25 and 47.54, 75. I did have a bounce where we are right now, exactly where we are right now, but that's gone. It was yesterday's low, and we're right at that point now. And I don't like this top and tail candle in the pre-market as well. It is increased volume as well, but with increased volume, you can see the volume candle there, showing that there's more sellers and buyers, and I don't know, obviously we never know, but it looks like we're going to break down through that area. If we see a bit of a market rally, I'll be waiting for maybe coming into this 50 moving average, or maybe even the 200 moving average, if they both curve over. So the 200 is this purple line and 50 is the red line, and I'll be looking for this area here, which is an area of confluence. I took a short of it yesterday and it worked pretty well. I went short, and I'll be waiting for it to come back up into that area again as well. And with confirmation, yesterday I took it on the 5-minute chart, and that's with confirmation. So basically I'm looking for a candle that looks like that, maybe higher volume as well, to show that we've got sellers, more sellers, and as long top and tail as possible, and confirmation will be on the break of that candle on the 5-minute. So when we break down, I want my entry to be there, and I'll do something similar as well. So maybe I may have another limit order sitting there as we touch it, but then I'll add on confirmation. And we've got our defined stop as well. That pivot, a few ticks above that pivot, could be our defined stop as well. So you don't even need to have a wide stop on that. So that's why I'll get in on the touch of that level, and I'll get in on confirmation. So it will look a bit like that. So my entry will be there, and my other entry will be there. And that's it. That would be a short, and we're in an hourly downtrend, as you can see. We've just made a new low. We broke yesterday's low, and so we're in a confirmed downtrend on the hourly. So let's check the daily. Broken this structure now. In fact, I've played around with my adjustment. That was how I did it yesterday, but I've just turned on the contract change adjustments. Let's get rid of that, which means any drawings I've got will be a bit skew-if, but there you go, it's back again. So that's the breaker structure we saw, and so we're now below it. The important point on the daily is this pivot here, and that's kind of what I'm looking for. That's why I'm looking for that for a bounce. It's also coming off of this 20 moving average as well, just there. So that's why I'm looking down this area for a potential bounce, mainly because of the daily, and it's an area of demand on the hourly. If we do break below this, then we are looking for a potential daily change of structure. So potentially I'm looking for a break and retest of that daily level of that demand zone, which will then be a supply zone. And then we've got our target, which will be this area here. Happens to be where we had the most volume as well. And by the time we get there, maybe the 50 moving average would have caught up as well. So that's it. So that's probably a bit optimistic. That's going to be like a swing trade, short maybe, if we do break that area. But as a potential target, if we are seeing a bit of down movement over the next few days, because we've got this high area of volume. Weekly, still in an uptrend, and again, going back to the daily, we haven't put in a daily downtrend. We've just broke the trend. We may just be going sideways for a bit. So there's no bias yet. That's kind of the line in the sand. We may be just eating time off the clock before we see another move up. So, but that's kind of watching this area. And then on the weekly, just a little pullback on the weekly. We've had 1, 2, 3, 4, 5, 6, 7, 8, 9 weeks. 9 weeks of, yeah, so 8 bars. We've had 8 bars or 8 weeks. Yes, last week was the 9th week of green weeks, and so we are due a bit of a pullback. If you go back, when was the last time we saw 9 weeks? Even you go back to before COVID, you can't see, there's no 9 weeks even here. 1, 2, 3, 4, 5, 6 red. 1, 2, 3, 4 red. We've not had 9 weeks of green weeks, as long as this chart is shown anyway, unless you see something differently. So we were very overdue a pullback, and that's the reason I took some shorts up here on the Qs, which played quite nice. I'm out of them now. I saw the profit yesterday, and I got out at the very bottom of yesterday's move. So, okay, let's recap hourly. Let's recap the levels again. So I'm watching for a bounce here. I'm going to take initial entry there. I'm going to use the stop as a few ticks below the top of that demand zone. I may just use that as my stop, so I'll give it a $5 area. Get out, keep my top tight, my stop tight, and if it breaks through that bottom of that candle, you know we are in the demand zone, I'll put my stop a few ticks in below there, and I'll get in at the bottom of the zone. And if we break that zone, then we've got to change the trend anyway, so we're no longer looking for longs, or not initially anyway. We've got this big gap to fill, so we'll be looking to go short anyway. And that's it. Higher, so these are higher probability bounces. I would say this is a higher probability rejection, but with confirmation. And then we've got this area of supply, 2 areas of supply, this area here. So we could keep an eye for a rally back up to these highs around here. That's a rejection, and that would be a rejection area. And we've got our defined stop loss area as well at all-time highs. So, and I would just give it a couple of ticks, a bit of space above any candle's eye in case you get whipped out. Maybe give it 2-3 ticks, or maybe $1 above as you stop. And then if it does whip up and come back down, you may just stay in, or it gives you time to re-enter. And that's it. That's basically my level. So to confirm, 47, 44, 25 bounce, high probability. 47, 54, 75 bounce as a higher probability trade. Ignore, this is now no longer on the table. And a rejection I'm just looking at this area here. I may just watch a couple of areas later. Potentially 47.90. No, I'm going to stick with 47.97, and you can use 4800 as your stop area. So I still quite like this area, it's the same as yesterday. You know, we came, let's look at the most recent times we've been there rather than look at the, no, we're going back before the most recent times on that other level. So potentially if you wanted a higher risk rejection, then 47.90, but I'm not going to watch that. I'm going to go with A+ setups. So I'm watching 47.97 for a rejection, and that'd be coming off the 50. It's area confluence as well, tops and bottoms of candles, and we've got the 50, and potentially we may have the 200 curving round towards it as well. So that's the area I'm watching, and obviously I'm watching this area of supply, which is 48.30 area for rejection, and 47.97 as another rejection, with a 4801 maybe as a stop. So it gives us a $1 risk on that trade, and that's it. And obviously I'll be watching level 2 as well, and I will adjust my stops based on level 2. So if I see a lot of sellers slightly higher, then I may just put my stop above that area, or if I see lots of buying coming into it, I'll just get out early. That's kind of why I use level 2. It lets me know whether I can hold my stop above it, and if I see sellers coming in and there's no follow through with buyers, then my stop will probably hold and then come down. But obviously lots of buyers coming in, coming back, then buyers coming back in again, then it's probably going to break through. So I know to get out of my trade early. That's it. Let's look at SPY. Very similar. In fact, got this area of demand again. So 468.46 for bounce. Maybe the stop can be just below that low, 467.23. That's a $1.23 stop loss if you get in just above. So it can be a decent stop. Again, I quite like the rejection up here at 470, same levels as yesterday basically. In fact, MES is the same levels as yesterday. We had a lot less volume yesterday as well, if you compare that to, I'm looking at it today. So our volume had more volume than we did on Friday, kind of expected. Yeah, so same levels as yesterday is what I'm watching. Same levels as well, rejection up here, bounce down here. 468.50 for bounce, 476 area for rejection. Qs looking a little bit more weaker. We've got the adjustment on. Oh no, that's fine, that's NAS. So it's broken that area. SPY's yet to break that area. So Q is looking a bit weak. Q is looking a little bit weaker. And potential bounce area was where I was watching. It's going to have to be this area here, 394 to 396. Yeah, I'm not too enthusiastic about that. Let's look at the daily. Yeah, it's got to be when it comes back down here. So this is going to be the area to watch for, 394.39 for potential bounce. So way to go. So we need to let it come down. So back to the hourly, 394. So this area down here, I swear I marked off anyway. Got two areas there, so we'll watch that area for a potential bounce. And then rejection, let's get rid of that, so I don't like that anymore. Rejection will be up in this area supply now. And 403.50 for a reject. I think that's the only place to 403, that area. maybe as we've got a bit of a gap down with not much volume, we could look for a break of the pre-market low for a continuation of this trend down, a short. But one to keep an eye on, as there's not much volume. There's not much volume until we get back down to this area. So we could see a continued push down and we get our target. So I'm going to be looking for a potential rejection or a continuation, maybe on the next pullback. So let's just put a level in. Next pullback for a short, 399, 400. Look at that, it's a round number. So if we pull back to about 400, I may be looking for a rejection. Let's just put an alert on there. Nasdaq, same. In fact, it'll be Nasdaq. It'll be NQ or MMQ. I'll be taking it on. That's fine. That's the alert. I must have Okay, didn't like the alert because it says crossing the line. I'll sort that in a minute. So NQ, kind of want to catch the pullback onto this alert, onto this line again. Same levels as yesterday again. Funny that yesterday we put this level in based on this area confluence. Came down, touched it, bounced. That's why I got out of my swings was for QQQs. In fact, it wasn't QQQs. I took SQQQ, which is the inverse, but I based it on the QQQs and the NQ chart because I got out when it got, my out was there and my in was up here. I got in there and I got in there and I was out down here. So a decent trade. So now I'm looking for a pullback into that area for it to continue down. We've got that daily level as well, which is 46.04. So 16,630 area for a potential rejection, higher risk rejection as well at 16,600. This will be a scalp down here. 16,762 will be a higher risk rejection based on there's not much. We've got the lows. Well, it's coming into that area of supply, so maybe not higher risk, but with confirmation, and obviously a higher probability trade will be at 17,034, this area here, for a rejection. Oil had a bit of a sell-off yesterday. Relatively large red day. Still waiting for it to come back down to this area, and I really quite like it for a bounce. There's nothing to watch yet on oil, and that'll be a swing trade bounce I'm watching for. And obviously if we do break this area, we could be looking at a continued sell-off, but I expect oil prices to start going up with all the conflict going on in the Middle East. So if we can get a bounce down here, that would be great, and then we could get it all out to over $100 a barrel again. So nothing really today to watch for. That's the daily. See anything on the hourly? There's a little RBI setting up there, set up above all the averages, but still below the 50 and the 200. I really want to get in either at the level down here or when we are over the 200 moving average. Look for a long trade over this point of control. 74.04 seems to be the area to watch out for. So potentially a break of this area long, or a pull back to this area long. They're the kind of trades I'm waiting for. And then gold, so 12 minutes before market opens. Gold's coming into one of our potential areas to buy. I don't really like that area anymore. That area there is still valid. I like this area because of the pivots here and here. So if gold can get back down to the 50 moving average, 2014 to 2015, may consider a swing trade, and that will be confirming we have this uptrend, potentially a lopsided head and shoulders pattern as well. So we're either going to bounce or it's going to break down, and see what happens next. So we can see the trend line. Let's just put the trend line in so we've got something to play with. Before I do that, I set the adjust. Those 2 points there, so that's kind of what we're watching. And if we move into this area, all the averages are moving closer together again now. So if we get into this area, maybe we could go sideways for a bit and then look for the breakout. But I'm not sure about this now. As I was hoping it would have taken out this high, which it hasn't. And we haven't taken out that high, so potentially we may be seeing a change of trend. But we'll keep an eye on it. This is the structure it needs to break to see the change of structure, the break of structure. So maybe if it breaks that, we can look for a short entry. And let's have a look at the hourly for gold, see if there's anything. Definitely sold off today. It's below the hourly 200 now. It's broken that area, and that's the area I was watching. So potentially we can watch for a short if we come back up into this area. Probably better this area here. That area there for a short. 2070 for a short. Higher risk 2060, 2056. To continue that downward hourly trend. Volume wise, that's pre-market volume, so we can't really go by that. And we've got this trend line. We could watch for the bounce off that trend line as well and see where we get. So one to keep an eye on. There's a potential couple of shorts go with the trend, and there's nothing long just yet until we're back down to the areas we talked about. Okay, that's it. So let's have a look, see if anything's moved on ES. No, so we've broken that low, which I said is now not valid. I was looking for a double bottom there, so we've broken that trend. So we're now waiting for this area, which is 47.55 area, 47.54, and we're watching 47.44. So that's a $10 gap. That's a $10 stop if you're getting up here. So just don't use many shares, or just keep it tight to stop out, and then play it again when it comes back down. Okay, so that's it for today. Trade safe, and I will recap my trades. Hopefully another green day today, and I will speak to some of you later. Okay, thank you for watching.